has been here for tech and growth and all that other stuff. Alan Nuckman's looking at Schlumberger, the chief market strategist at bullseyeoption.com. So, Alan, last couple trades, we were talking about trying to buy dips on stuff. It looks like for this one, you're looking to follow a rip.
Yeah, a little bit the opposite. I'm still a believer that there's good stocks and there's no such thing as a bad market. So we've done some plays, even though the markets have been a little bit, how should you say, uninspired. We've done Vale, British Petroleum. So the last couple of weeks, there have been some good plays, even though the markets had some volatility. But I look at that as opportunity. And this 4,500 in the S&P is an important number to keep an eye on. But let's come back to the strongest sector that we've seen in the last year. You're looking at crude oil. You're looking at energy. If you look at XLE, it's been up 60% in the last year. And a couple that I follow, Halliburton and Oxy, have both been up more than 70% in the last year. Schlumberger is a laggard in the leading sector, so it's only been up 50%. So I like the chart pattern, and I like for it to play some catch-up.
Okay, how do you do it? Because you like to buy in the money options on stuff that's beaten up. Do you do the same approach here on a stock that's doing well?
Exactly. So the idea here is the stock's been trading between 30 and 40 for 5 months. A breakout target's 50. So I'm looking at that 35 is the midpoint of that sideways range as a level to lean on. Looking at the August 35 call. Now, the August option is only going to be $50 or $75 more expensive buying the June option. This gives me 6 months of time for further development. And if you look at this stock was trading at 120 in 2018, 120 in 2014, and 80 in 2018. So just a couple years ago, there's still a lot of upside. And the PE ratio in the energy sector is so much lower than the S&P. And I will say the S&P is at 2-year lows at the PE ratio. So stocks are cheap in this Fed fear fiasco time that we're feeling right now.
Okay. So buy a call and hope for the best. And look, the hope here, I'm being a little sarcastic. This is trend. This is strength. This is a group that is going in the direction you want it to. You're not betting on reversal in this case, which is, I think, something that a lot of folks haven't quite come to terms with yet, that the stuff that's trending upwards has not really been the most rewarding stuff over the last couple of years.
Right. And so this is a sector that had been so downtrodden for such a long time that these bounces, even though they've been significant, are still nowhere near the highs. Now, I'm not going to just get in this whole discussion of reflation versus inflation with you, because that'll take hours. But if we have the conversation, it's not inflation right now. What you're seeing is the rate of inflation that's scaring people, because we're using 2020 as a baseline. If you look at products, we're nowhere near the inflation-adjusted highs of a lot of things. If you look at corn, if you look at gold, if you look at coffee, we're nowhere near. Guess what? We're nowhere near. Crude oil, we're not even at the halfway point. Crude oil at $100, and I'm just saying that because it looks like psychologically that it has to happen, but crude oil at $100 is still half of the inflation-adjusted 2008 price of $150. When you adjust it to 3% inflation annually, then that works out to be $195 a barrel. We're not even at the halfway point. And people are very, 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 very fearful of that rate of inflation, not the actual inflation.
Okay, I like that point. Good one, Alan. Thank you. Schlumberger, the trade. Down this morning, buying it in the money call for some more upside here to see it get back above $40. Energy is hanging in there. Crude oil is a little changed today, but market's pretty mixed right now. Thanks, Alan, chief market strategist at bullseyeoption.com. Okay, still going.